Will Australia enter recession in 2020? Let's have a look. Hello everyone, Florian Heise here and welcome to another episode of Heise Says. I've got my stein of coffee and I thought we'd have a look at this article written by Jason Murphy discussing warning signs of a recession in Australia. Now before we get into this, let me know in the comments if you think we'll head towards recession this coming year. And notice the adverts. Google knows my wife is pregnant, so apparently they're advertising midwives to me. There you go. It's funny how it all works. At least it's better than some of the other ads I've gotten on videos. So to the article. Indicators are flashing red. Warning signs. Recession is looming. The past 12 months have been a roller coaster ride for Australia. And all the warning signs suggest things are about to get a lot worse. So, are we headed for a recession? It certainly seems like it. 2019 felt like a rollercoaster ride. 2020 is almost certain to be even wilder. Australia has never started a year with interest rates so low and with so much uncertainty around. For those of you that don't remember, we'll bring up the cash rate. I mean, look at it, guys. It's just ludicrous. What a start to the 20s, the roaring 20s. Do you think we'll have the roaring 20s in Australia, or is it going to be the depression 20s or the recession 20s? Doubt is enveloping housing prices, wages and global markets. It's hard to see how the RBA could possibly get relaxed enough about the future to raise interest rates. Well, if we just look at one of my favorite charts that I promise I will turn into a mug this year. Look at the wage price index forecast from the RBA. I'm sure they'll get it right in 2020. So what will happen in the next new year? Here are 4 big issues that you should be thinking about. First one is housing prices. 2019 was a surprising year for house prices. The housing market started the year amid unusual gloom, then did a big U-turn. It ended up in a much more familiar place for Australians. A frenzy of bidding driving housing prices up at a record rate. Well, I would question that. Depends on if you trust the data that we're getting from CoreLogic and on what area you're looking at. I mean, there you go. Month-on-month change in national dwelling values. We all learned something in 2019. Some Aussies were shocked to discover house prices can actually fall. Well, yeah, he makes a very good point there. There's a whole generation that thinks housing prices can never go down. What's going to happen when all the boomers retire, guys? We also learned house prices will bounce back if the RBA cuts rates. Yeah, well, just look at these arrears rates going up. Keep that in mind as well. This is good news for homeowners in the short run because it looks likely the RBA will cut rates again soon. The official cash rate could hit a new record low as early as February 2020, and the bank won't mind if house prices rise. What do you think, guys? Do you think we're going to get that cut in 2020? Remember what our governor said. If we get down to 0.5%, if this cash rate drops down to 0.5%, we'll have QE. And once we have, can we ever get out of that? The US has got not QE. Can you escape this trap? So it has said it was surprised by the effects of the recent house price fall and implied it won't be making that mistake again soon. It likes the way people spend more when their house prices are rising because that spending drives the economy. But see, this is the issue. If we're investing so much of our wealth just into housing, there's no real innovation in there, and what's the long-term benefits for the economy there? This is my concern with negative gearing. It's artificially funneling more money into housing than into business or innovation or things that actually produce. But in the long run, the link from housing prices to interest rate rises raises big questions. With interest rates at record lows, surely they must eventually rise again. After all, the last 2 decades of rising house prices happened as rates fell from 5% in 2000 to 4% in 2010, then to 0.75% in 2020. 2020 sounds so futuristic, doesn't it? It's awesome. I remember when I used to write checks, it was always annoying getting the date right. I guess it's not really a problem anymore, is it? If falling rates cause a long positive housing price cycle, what happens to house prices if the RBA one day enters a multi-year cycle of rate hikes? A very good question. And what happens to people who are already struggling to make payments? We see our saving rates has gone up. When we look at consumer confidence is down. Business confidence and conditions are down. What happens? So a recession. In 2019, many global recession warning signs started flashing red. Yield curves briefly inverted in the US, which has been a mostly reliable precursor. And we can look here at the yield curve. When the blue line dips below zero, a recession usually follows. But was the recent dip big enough? Google Trends data also shows something interesting. A big surge in people searching for information about recessions. This indicator may be less technical than the yield curve, and it has less history to draw on, but it certainly peaked before the GFC, so its accuracy should not be sneezed at all. Well, there you go. Look at that. That's, I would say, a very important indicator. This shows us that people are worried. People are definitely worried. People are preparing. This is why the saving rate has gone up here in Australia. This is why all the tax cuts that people hope will drive up spending is just getting plowed into debt. At home, the biggest indicator of a possible recession may be the Reserve Bank talking about quantitative easing. Their forecasts remain mostly positive, but quantitative easing is a tool for desperate times, and if it is on the table for use in 2020, we have to ask why. Interest rates are already at record lows, and seemingly having little effect. If a recession does come in 2020, it's frightening to contemplate how little the RBA may be able to do to reverse it. I mean, what signal do you think that will send to consumer confidence if we start, well, if not only we enter a recession, but if we also have quantitative easing? What would that do to your confidence, guys? Maybe we're all expecting it. That's why people are buying silver and gold. So jobs and earnings. 2019 was not a terrible year for jobs, but as the next graph shows, it was not impressive. Unemployment and underemployment, so underemployment and unemployment, both rose, taking us nearly back to where they were at the start of 2018. So here it has the underemployment rate at 8.5 and the unemployment rate at 5.3. And this is also another thing to consider. This is based on the ABS's methodology, which is different to Roy Morgan. I prefer the Roy Morgan one, but really, I mean, what they take to consider you employed is completely a joke. Rising underemployment is usually a big sign, a bad sign for wages. The backbone of the economy is our paychecks. Australians mostly spend what they earn, and our earnings have not been growing well. Wages growth is down to around 2%, barely above inflation. It is fair to ask what will happen in 2020. One useful sign for the future is the ANZ Job Ads series. It counts up job ads to try and predict the future of the labour market. But it is bad news about next year. Job ads have been falling, as the next graph shows. And we can just have a look at that here. You can see they are trending down. I would argue that's in line with business confidence. That's what it is. If you're not confident, you're not going to take on people, guys. It's a big effort to take on staff. This suggests fewer people will be starting new jobs soon. This is bad news because to get a rise, we need a tighter labour market. Unless you're in the civil service. But that's a different world. It's kind of insulated from the real economy. So lots of people getting hired and not so many getting fired. Instead, the reverse seems to be happening. Accordingly, the government has downgraded its wage forecast for 2020 in its mid-year economic and fiscal outlook. So global markets. More and more Australia's economy depends on global markets. We can be lifted up by policies made in Beijing, but we can also be brought down by mistakes made on Wall Street and Silicon Valley. And there have been plenty of the latter in recent history. Well, yes, guys, I'll bring this up. Look at the S&P 500, and every time there's hopes of a trade deal. 2019 was the year of the WeWork saga, a hot American real estate startup funded with way too much venture capital. It was also going to float on the stock market for billions of dollars. Instead, it suddenly stumbled and failed. The float was cancelled, the CEO was sacked, a whole lot of dodgy dealings were exposed. The company is now slashing staff and trying to avoid bankruptcy. Well, we're in the age of the zombie unicorns, I'd call them. WeWork points to a sickness in the American startup bubble. In 2019, WeWork's problems looked isolated, but are they? In 2007, the pension funds that were having problems with subprime loans looked isolated too. It was only by 2008 we realized they were a symptom of a bigger problem that led the whole world into a global financial crisis. A lot of money has chased the startup bubble. And if startup firms turn out to have been a bad investment, a lot of money is going to be lost. How many WeWorks are out there? How many companies pretend to be winners but are actually hollow inside? Is Uber one? Slack? Spotify? Could they be revealed in 2020 and harm the global economy in the process? That's a very good point he's making, and I think he's right on the money there. I think we're going to see a lot of these companies get into trouble. And all this is without mentioning Donald Trump, Brexit, impeachment, the trade war, and the US elections. 2020 is going to be insanely busy. Find out what happens to global markets is just one of the many reasons 2020 is going to be a hell of a ride. So there you go, guys. There's Jason Murphy's take on 2020 and if we're heading for a recession. What do you think? Do you think Australia is heading for one? It'll be interesting to see what the latest manufacturing PMI data that comes out for Australia tomorrow. We'll see how that goes. And the recent sales figures over the Christmas period. Anyway, guys, thank you for watching. Please like, share, and subscribe to the channel. If you're a fan and want to help us produce more content, we have a Patreon where you can make a small donation. We have referral links for Amazon, eBay, and Independent Reserve. And we also sell our own merch from the Heise Says blog. Pocket squares made right here in Queensland. Thanks, everyone. Take care, and I will talk to you all later. Bye for now.